And let's fast forward a couple of years. This guy, Marco Streng, is the founder of Genesis Digital Assets. And then he hired me. I must say that I didn't see it at all when I first saw Bitcoin in 2012. I still didn't see the potential, and I needed like 5 years until 2017 really to understand it. And once I did that, I started focusing my career on it. I worked at Genesis Mining, which is now Genesis Digital Assets, helped them scaling in Central Asia. And also because of my background, which is coming from M&A, due diligence, and traditional finance, I was always working at the intersection between the traditional financial markets and Bitcoin mining. And so my first own miner really was, or the first miner I actually saw was in Kazakhstan, in a 40 megawatt Bitcoin mining facility that we developed.
So you were on the ground floor, let's say one of the biggest mining firms with one of the fastest growth trajectories at that time. Bring us into a memorable story that you have of either things going really well or you stepping into a facility and things going really bad. And share that pace, that culture, the fast environment. For those who don't know, Genesis was one of the original large graphics GPU miners at high scale, ASIC miners at scale, really would be today's public Bitcoin miner back in 2012.
Yeah, it was, actually until 2021 also. The scale what Genesis has and still has today is still one of the biggest miners on the planet. But it's not so publicly known because they are not trading on the public market, so they don't have to report how big they are. So that's why they are not so much in the spotlight. But they were at times when Marathon and other players, they had like their first 10, 20 megawatt farms. Genesis already had in hundreds of megawatts. It was distributed across GPU mining. They focused also a lot on Ethereum in the beginning, but also transitioned more and more to Bitcoin. And obviously for me, it was a big challenge as a German national. I was basically put into a cold water, and I moved to Kazakhstan, and I there to connect basically the local companies with the overall headquarters. And one of the large challenges was really to explain to local stakeholders that there is a constant load of 20, 40, up to 100 megawatts of power that is drawing this 24/7, and that the equipment that needs to basically provide this load all the time. So there was a time when also some transformers went bust. The equipment wasn't ready for that. A lot of structural challenges. We had to take care that some precious materials like copper cables were still in place overnight. So after that, so that was quite a challenging environment, and definitely not only culturally, people there are super nice and well educated, much more than kind of our Western perception would expect. So that has basically brought me a long way in my thinking of this region, and also of thinking about digital currencies in general. So that was a great experience.
And so you drop into this region, do you know how to speak the language or no? And you're trying to explain to the locals the benefits of our industry. Give me a little bit more on that experience specifically, as I can imagine how hard it might be.
Yeah, we also organized the first blockchain focused conference in the region. So people speak Kazakh and Russian. I must admit that I thought, okay, I'm going to learn some basic Russian. It's also useful outside of Kazakhstan. So I was able to communicate in a cab. Also, that was my level. So very basic. But we organized the first blockchain conference in Astana. And it is also, we had a bunch of politicians also coming there. So not unfortunately, not the president, but people on the first row of ministries, and literally having whole security apparatus coming there. Suddenly people from the Secret Service flooding the place, and then having to basically sit in official meetings where you also still don't really understand a thing, and just listening in and maybe say a few words when it's translated to you. Being able to converse with all of the stakeholders from politics and business is very intertwined there. As a European, I could drop a hint and say maybe that's similar today in the US, but it's very intertwined. So that was something where you have to really understand also some of the local specifics to don't basically play anyone's territory that might be a little bit tricky to play in. So that was always a fine line. And we had, through very great local partners that are still today leading Genesis Digital Assets, we're quite successful there.
And so navigate me, what's the next career jump? Where do you head after Genesis? Is there a clear inflection point that kind of an opportunity presented itself?
Well, yeah, it was basically in 2021 during COVID, like there was the next big hype on Bitcoin and in general trading, when a lot of the institutionals also started really seriously looking at the asset class. And my profile was quite requested because I had like this very kind of top tier consultancy stuff background, and then went into digital assets, which was something that was not so available. So I got actually a lot of requests from investment banks, PE funds to help them assessing opportunities. And that's why I found actually the opportunity to also set up my own firm, Crypto Oxygen, where we were actually one of the first advisors in the space that helped PEs, VCs, investment banks, or big family offices to assess their digital asset investment opportunities. And that was quite fascinating because we did it also on different continents. We did actually a lot of work in the US. I'm happy that I also publicly say that we were the lead commercial and technical advisors on basically the Pennsylvania nuclear power plant that had a proprietary mining facility by TeraWulf on site. So that was something that we facilitated also. And there were fantastic opportunities in South America, Africa, Asia. And I had the opportunity to see so much. It was also funny because we did a lot of different digital assets. So we also did some NFT projects and exchanges. However, over the years, like this has very much narrowed down. And I would say today, or in the last years, we were really Bitcoin only. It has really shown that the most substance is in what is your podcast, Digital Gold. So yeah, coming back there was pretty fascinating.
And you're focusing on M&A initiatives, consulting, large-scale mining. How did the industry mature and the investor type mature, and your presentation change from presenting this to local politicians to maybe pitching a boardroom of an investment bank or PE firm? What changed and where did the narrative shift?
So I would still say that boardrooms and investment committees, even today, are still much more conservative than you would think. I think that in the US, it's better. So typically, there is already much more openness to digital assets and Bitcoin mining investments in the US in more institutionalized funds. In Europe, it's very far behind. So in Europe, still a lot of ICC still have a problem with Bitcoin. They cannot touch it. They cannot feel it. They don't understand it. But in general, you would be very surprised if we are stepping out of our own bubble, how far behind lots of the boardrooms and ICs still are. The biggest shift, though, I would say, is the understanding of Bitcoin as an asset class and the interconnectability with energy, how important energy is, what role energy plays for Bitcoin, but also the other way around, what Bitcoin can play and can influence energy and thinking of energy. So a lot of the funds which are now seriously looking at it are more coming from the infrastructure side, institutionalized infra funds who are really seeing this great potential that Bitcoin as an asset class has for the better monetization of their different kinds of power producing assets.
And so this merge of real large Bitcoin mining players and small ones and the energy markets. Now, obviously on the podcast, we talk about those interconnections a decent amount. Walk me through that industry and maybe where it is today in Europe, maybe where it was 5 years ago, and where you see it going. So a lot of time can be spent on this question as we digest the market, and then we can talk even about the US as well, what you're seeing there.
A lot, I would say the biggest mindset shift or the biggest difference is the focus on pure financial incentives versus ideology and the renewable story. I would say whereas I think a lot of difference is that whereas investors in the US are either more agnostic or have understood that actually Bitcoin is a great way to monetize renewable energy assets, in Europe, it is still a very ideologically driven discourse. So a lot of the funds that are heavy investors in infrastructure, they have in their mandates, they want to be ESG compliant, and this ESG compliance sometimes just does not include Bitcoin. So I had a lot of situations where we talked to investment managers and they said like, yeah, it's great, but I like it. But our IC wouldn't probably touch it because it has a Bitcoin exposure. And the amount of education that you still need to do to get them across and explain, like, Lukas, it's Bitcoin today is the fifth biggest asset class. It's there. You are not the ones that are deciding like whether that has value or not, or whether that's so ecological or not. It's there. And it's something that you need to basically, that you also need to bring to your investment community. In the US, that is already there. Like, this understanding is already there. In Europe, you see a lot of market dysfunctionalities. There is still a lot of the energy markets are very driven by a lot of subsidies, by a lot of energy taxes. So that's something, a lot of complexity that you need to understand. And what's happening is that sometimes that drives to companies that grow very fast. So energy and battery companies, for example, we have one battery supplier in the Nordics, Northvolt, which was one of the biggest battery producers in the region. However, production costs are much too high compared to Chinese competition. So they just went bust a couple of weeks ago. Another big focus in Europe lies on hydrogen production, but even where a lot of scholars tell you that it's just not efficient to basically produce steel by firstly transferring energy to hydrogen and then use this hydrogen to generate heat and then make like green steel. But cost-wise, it will never be able to compete with steel that you can source on the global market. And this is where the biggest mindset difference is, I would say, between the US and Europe, is that US in general is much more pragmatic, also sometimes agnostic, much more efficient, less ideologically driven on the business side of things when it comes to Bitcoin and energy.
And I would agree with that. And I think we have our own flavor of, and it runs based on, I would say, who's in charge at the presidential level and what type of subsidies that kind of guide allocation of capital to certain energy resources, even if they're not beneficial for broader society to access that cheap energy for multitudes of reasons. And when it comes to the demand response markets and the ability for gridmetries and its innovation and integration into the data centers with energy grids, walk me through that process. Was it always available and now you guys are unlocking it? Or is this new regulation that is allowing this type of frequency and grid control?
Basically, how we got to it is that we are in a very strong partnership with Flexionex, which is a data center operating company in Europe with data centers in Sweden that host a large share of ASIC servers. And they basically asked us more than 2 years ago, actually, like to look at the business and assess like what can be achieved with it. Like, there are some value levers, like a very typical, for you, very boring consulting approach.